Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories behind corporate filings. And trust me, this one has some interesting characters and even more interesting financial maneuvers to unpack. Hold on to your hats because we're diving deep into Cantor Equity Partners I Inc. CES. Latest SEC filing, looking at their August 7th report, and let me tell you, it's a wild ride involving convertible notes, Bitcoin, and business combination that sounds like it's straight out of a tech merger playbook. First off, this report is a Form 8K, a current report that companies file to announce major events that shareholders should know about right away. Think of it as the company's breaking news bulletin. The company we're looking at is Cantor Equity Partners I Inc., also known as CPO. They're based out of the Cayman Islands, and this report details some significant financial dealings they're involved in. The report is dated August 7th, 2025, but the earliest event they're talking about happened on August 1st, 2025. This immediately tells us we're talking about very recent developments. And here's an interesting tidbit. CPO identifies itself as an emerging growth company. That means they get some regulatory breathing room as they grow, but it also flags them as a company still finding its footing. Now let's get to the nitty-gritty. This filing is all about CPO entering into new significant agreements. They're essentially signing some very important contracts that could reshape the company. They mention a previous report from July 17th that laid the groundwork for what's happening now. It seems like this August 7th report is an update or a further confirmation of those earlier plans. The core of this is a business combination agreement. This is a really big deal. It means CPO is merging with or acquiring another company. The filing lists a whole bunch of other company names involved, like BSTR Holdings Inc., Pubco and SPPO Holdings Inc., Pubco and SPAC Merger Sub. It's a bit of a mouthful, but it signals a complex restructuring or merger. One of the key pieces of these agreements involves convertible notes. These are basically loans that can be turned into stock later on. They're planning to issue a whopping $500 million worth of these through something called an indenture, which is a formal contract for issuing debt. On top of that, they're also dealing with preferred stock. This is another type of stock that has different rights than common stock, and they're raising an additional 300,000 shares of it. The details of this are laid out in a certificate of designations, which is just a formal document outlining the terms of that preferred stock. They're also selling CPO Class A ordinary shares. That's 40 million of them for a significant chunk of money, $400 million. This is a straight up equity raise, selling ownership in the company to bring in cash. Now here's where it gets really interesting. Some of these shares aren't being sold for cash, but for Bitcoin. Yes, you heard that right. Bitcoin, they're taking in over 4,000 Bitcoin in exchange for shares. This is a huge nod to the crypto world and shows how much digital assets are becoming part of mainstream finance. The conversion rate is quite specific. They're using the average Bitcoin price over a 10-day period leading up to the closing date to determine how many shares each Bitcoin investor gets. They're dividing that total Bitcoin value by $10 per share. This is a common way to handle crypto-based investments, setting a clear valuation benchmark. Remember those CP Class A shares we just talked about? Well, this is the asset class involved in both the cash and the Bitcoin deals. It shows a unified approach to raising capital through these different avenues. Under this section, they're specifically calling out that the securities they plan to issue in these private placements are not registered with the SEC. This is allowed under certain exemptions like Section 4N2, which is for private transactions not involving public offerings. It means these deals are happening directly with specific investors. This section is for any other important events that don't fit into the other categories but are still significant. Here's something really key. The initial convertible note deals include options. Lenders who bought the initial notes have the option to buy even more notes. This is a massive signal of confidence from these investors. They're willing to put more money in if they like how things are shaping up. They're talking about up to $125 million in additional convertible notes here. And on August 1st, some of these investors actually exercised those options. They took up additional convertible notes worth $34.87 million. This confirms the investors' commitment and is a very positive sign, as it means they doubled down on their investment. This part is like the public service announcement of the filing. They're telling people about another major document they're going to file, a registration statement on Form SMES4. This is basically the big prospectus that will contain all the details about the business combination and these private placements for everyone to see, including a preliminary proxy statement for shareholder votes. This is a standard but very important disclaimer. It means the SEC hasn't said yes, this is a good deal, or no, this is a bad deal. They just review the disclosures. It's up to investors and shareholders to do their homework and decide. They're also stating that anyone claiming otherwise is committing a crime. This reiterates that the securities being issued in these private placements haven't gone through the full SEC registration process. This is normal for these types of deals, but it means these securities might have restrictions on them. This section details who might be considered participants in asking CPO shareholders to vote for this business combination. It typically includes directors and executives of CPO and the other involved companies. They're essentially alerting shareholders that these individuals might have a vested interest in the deal going through. This emphasizes that the report itself isn't trying to get people to buy or sell any stock or crypto right now. It's purely informational, and any actual offers will be made through formal channels like prospectuses. They're being very careful with their wording to avoid any accidental public solicitation. The forward-looking statement section. This is where companies try to protect themselves from lawsuits by saying, hey, what we're saying about the future might not actually happen. They use words like expect, anticipate, believe, and talk about hopes and plans. And here they list out all the reasons why those future predictions might go wrong. Things like the deal not closing on time or at all potential shareholder redemptions, which means existing shareholders might pull out, reducing the amount of public stock available, and general market volatility, especially when Bitcoin is involved. This is a big one. The whole deal hinges on getting shareholder approval. If CPO shareholders don't vote yes, the entire transaction could fall apart. This is a critical risk to highlight because they're dealing with so much Bitcoin and crypto related services, it's almost guaranteed that their stock price will be tied to Bitcoin's price. If Bitcoin tanks, their stock likely will too. This is a huge gamble for investors. This is the housekeeping section where they list all the documents attached to this report. Here, they officially filed the form of the convertible note subscription agreement from August 7th. This is the actual contract that governs those crucial deals. And finally, the signature block. It's signed by Brandon Lutnick, the Chief Executive Officer of Cantor Equity Partners, in giving us a face to the leadership driving these massive transactions. So what's the big picture here? Cantor Equity Partners, I Inc. CPO, is orchestrating a major business combination which involves raising a significant amount of capital through both traditional means like convertible notes and preferred stock, and in a very modern twist through Bitcoin. The extensive involvement of convertible notes with options to purchase more indicates strong investor confidence in the underlying business or the potential of this merger. The acceptance of Bitcoin as a form of payment for equity clearly shows a company that is forward-thinking and comfortable navigating the volatile but potentially lucrative world of cryptocurrency. However, investors need to be acutely aware that this venture's success is heavily influenced by general market conditions and crucially by the unpredictable price movements of Bitcoin, as not a situation for the faint of heart. It's a high-stakes play that could yield big rewards but also carries substantial risk due to its direct correlation with digital asset volatility. They are positioning themselves to be a player in a rapidly evolving space where digital asset volatility. They are positioning themselves to be a player in a rapidly evolving space where... What's your take on this crypto-infused merger? Does CPO's embrace of Bitcoin signal a smart move into the future or a leap into a highly speculative market? Let me know your thoughts in the comments below. If you found value in this breakdown, hit that like button. It really helps our channel. And of course, subscribe for more decoded corporate insights. Don't forget to join our Discord community linked in the description for even more in-depth discussions. Thanks for watching, and we'll see you in the next Decode.